Okay, hi everyone. Thanks for joining. I'm Renette. I lead marketing here at LightSource, and I'll be introducing today's session. Here's what we'll cover. Uh, we'll start with where the $170 billion IEEPA refund actually stands and what that means for you. Then we'll get into why tariffs aren't going anywhere, the Section 122 surcharge, and the new Section 232 rules, and a risk mitigation playbook you can actually use. Then we'll close with concrete next steps and open it up for questions. A few logistics. This session is being recorded, and a full replay will be provided to everyone who registers within about 48 hours. We'll also cover the Q&A highlights, and you can share them with anyone that didn't attend today. If you do have a question, just drop it in the Q&A box, and Mitchell and Spencer will get through them as time allows. With that, I'll hand it over to Spencer Penn, CEO of LightSource, to kick us off. Thank you, Spencer.
Thank you, Renette. Well, good morning, everybody. We're excited for this session on tariffs and the IEEPA refunds. My name is Spencer. I'm the CEO and co-founder of LightSource. We are a direct procurement operating system. Before LightSource, I spent most of my career at Tesla. I helped lead a program there called the Model 3, which is Tesla's first mass market electric car, and we scaled that business pretty significantly. We work with a lot of automotive folks, both at the OEM level and the tier one. I'm very excited to be joined today by Mitch Zajac. He's trade counsel at Butzel. Butzel has been advising manufacturers and importers on trade and customs for decades. Mitch has been living inside the IEEPA litigation, the Section 232 expansion, and the enforcement wave that's followed. He works with the companies that are actually filing these claims and restructuring their supply chains. So this is a view from the ground up, from true expertise, not the headlines. The origin of this is that Mitch and I actually met at an event called MEMA, which is a tier one automotive and OEM space that is an industry consortium. And Mitch spoke right before I did at this conference, and I thought, wow, this is by far the best tariff information that I'd heard. And I thought, what a gift it would be to our audience to be able to bring his expertise to the fore. So with that, I'll let Mitch give a quick hello and introduction, and then we can jump in.
Thanks, Spencer. Yeah, it's quite the happenstance connection, and it was great to be able to meet you at that event as well. Being involved with MEMA and working in the industry is something we pride ourselves in at Butzel. We are a suppliers law firm. We work with all suppliers, all shapes and sizes in the auto industry, but not just the auto industry, manufacturing, technology, anything that moves, makes noise, blows things up, holds things together. We're involved in that work, as well as just being a general practice firm. So tariffs. Whoever thought we'd be talking about the exciting world of tariffs, using exciting and tariffs in the same sentence is kind of oxymoronic, but here we are. And yeah, it's interesting. It's ever developing. It's worth a lot of money. So it's certainly an important topic worth talking about. I'm glad to be here.
Yeah, thank you for joining us, Mitch. So yeah, I guess I'll read directly off the slide. Where the 170 billion refund actually sits. But maybe before we even hop into that, maybe Mitch, would you be willing to give the audience like a little bit of a rundown of what are the IEEPA tariffs? How did we get to this place before we start talking about what folks need to do next?
Yeah, absolutely. So actually on the next slide, we tried to highlight kind of the different buckets of IEEPA tariffs. What we'll see is it's really three different groupings. It's reciprocal tariffs, it's tariffs dealing with trafficking, whether that's human trafficking or drug-related trafficking, and then there's also the country-specific tariffs. So from the get-go, really, President Trump, before he was even elected, had a lot to say about balancing trade deficits in his view, or equalizing trade in the U.S. compared to other countries. And one of the mechanisms he's used were these IEEPA tariffs. IEEPA stands for the International Economic Emergency Powers Act, and it's an old act and subject really only to one application back in the Reagan days, and it was intended to really be able to address an emergency situation. The Trump administration utilized the language of that statute to implement the IEEPA tariffs that you see on the screen, and that was subject, as you might guess, given the $170 billion worth of tariffs collected as an impact on this international trade issue. the public immediately responded with lawsuits and critiques, and ultimately this case went to the Supreme Court, where the Supreme Court determined that IEEPA tariffs were not constitutional. They went beyond the scope of the statute. They used tools that were not intended, and thus the need for some sort of refund process was kicked off. So back on the slide before, we see a little bit of detail about the kind of scope, this $170 billion of tariffs that were implemented. As we look at that middle box, that number has actually gone up. So there's a significant number of entries that are now available for some sort of refund process, but that number of importers affected is a significant number. 330,000 individuals, companies, et cetera, are all working now to try to get their refunds.
It's super helpful, Mitch. And so when we were looking at that breakdown of the three different IEEPA tariff categories, are these the tariffs that were in place previously, or are these the current tariff rates as of today?
Yeah, so these are the tariff rates that were in place from basically February to February. February 2025 to February 2026. And once the Supreme Court reached their decision, these tariffs within a day or two had to go away. And so the government, no longer was collecting these tariffs. As we'll talk about here in a bit, they came up with a new strategy or two or three on how to continue to collect tariffs for imports.
Yeah, it's super helpful. I guess maybe just a question I'm always curious about, when the Supreme Court said the tariffs had to go away, I mean, how quick was the government to act? Was it very fast, like they opened up the window for refund immediately? There's also this question I think that often comes up, which is, how well has the execution of the refunds been going? Like I could totally see a world where, if the administration were to get into a conflict with the Supreme Court, they could still drag their feet on giving the refunds, that kind of thing. So I'm curious, like, how it's all been going down.
Yeah, that's a great question. And it's a surprising answer. When you look at the tariff process, the tariffs quickly came and they also quickly went. Surprisingly, you don't think of government acting very quickly, but when it's come to these tariffs and CBP acting to implement changes or implementing new executive orders from the president into their processes, surprisingly, it's been fast. The tariff ruling came out at the end of February, and within a couple of days, the process was updated. And actually, it was one day later, tariffs were no longer being collected. And even though the executive order undoing the prior executive order hadn't been issued, CBP acted very quickly. In terms of the refund process, that's also surprisingly been relatively quick, in terms of government timeframes. The rule went into effect at the end of February, and by April 20th, the CAPE portal, which is the automated online system, or semi-automated, I should say, that was up and running for what CBP coined phase one. And within less than 3 weeks, companies started receiving refunds. And as of now, there's been over $40 billion worth of refunds, and I believe that number is still climbing.
Wow, 40 billion. So that's roughly just under a quarter of the refunds that the 170 billion that we had talked about earlier that's eligible.
It is. Yeah, it's an interesting kind of breakdown. And I mentioned phase one. There's now a phase two, and reportedly in 2 weeks there'll be a phase three, which I think they're going to need to be future phases as well. Because what the government has done is broke down kind of the status of the import into different eligibility phases for CAPE. The first phase was everything that was the technical term is liquidated for less than 80 days, which basically means the company brings in the product. It sits for a period of time, kind of in a processing stage. Typically, if there's no strange nuance to that import, it's about 300 days. And then 90 days after that, it becomes, 300 days, it becomes liquidated. And then 90 days after that, it becomes what's been coined as finally liquidated, which is a made up term by a CBP, which says basically they can no longer manipulate it on their own under the statute. And then 90 days after that, the product becomes ineligible for any sort of administrative proceeding, and it's subject only to court filings. Those different buckets have essentially been grouped in order to kind of phase in the process for refunds. Phase one dealt with just those that are within the strict control of CBP. Phase two, which went into effect on June 29th, deals with products which high volume importers use this process called reconciliation. It basically means you bring in a bunch of stuff, you don't know how much you brought in, you don't know the exact value because it's maybe commoditized and is the final sale price will change. And so you get the chance to reconcile that entry. It's more complicated than just the easy ones, so to speak. And so there was another phase of CAPE created. So that's, a lot of nuance, but it's effectively, the government is proceeding on creating incremental phases to enable these refunds.
Okay, that's super helpful. I'm going to ask, can I ask a very, very basic kindergarten level question about this stuff? So who collects the tariff? Like, where does the money actually get collected? So is it, someone ships something into the United States, and then does Customs and Border Protection go send you an invoice? Do you have to self-report? Is it the shipper's responsibility to collect from you? And clearly there's a difference between like the phase one that you're describing that's all CBP controlled versus the phase two with the more sort of reconciliation approach. But I'm curious, like, who actually collects the tariffs and who's responsible for making sure upfront that calculation is correct?
Yeah, great question. At the highest level, the party paying the tariff is what's the party that's called the importer of record. Whenever you bring a product into the United States over a certain value, you and I, if we go shopping in overseas and we buy something very expensive, we also are technically an importer of record. That when we have to do our own paperwork, if you've ever had to fill out the forms, on the plane when you fly home.
Yes.
But companies do that for every transaction. And so whoever is responsible in the commercial transaction to be the importer of record, sometimes it's the buyer, sometimes it's the seller, they are the ones responsible for tendering the tariff, really all duties, to CBP at the time of entry. And the products are not cleared for entry until those duties and tariffs are paid. CBP collects it, goes to Treasury, and basically it's the government's money at that point.
Okay. And for the money that they had collected from the tariffs, did they, I mean, maybe this is a really silly question, did they hold it aside under the assumption that there might be a possibility they'd have to pay it back out? Or did it get just like blended in with general budget? If that's a question, I'm not even sure.
Yeah, I don't know, procedurally the accounting that was used with the government. I have to imagine with this administration, there was no interest in holding money aside. It was just being used, and it's been talked about, right? The president's talked about how much additional revenue has been generated, and has talked about how much that or what that revenue is being used for. So I have to imagine it was basically thrown into the pot and used as the government's money.
Great. Makes a lot of sense. And then on the question of responsibility, who is responsible for, requesting the refund? So, it seems like the government CBP has set up this CAPE system, CAPE, which I'm sure is an acronym for something, and you can submit there. There's some shot clock there. Who's supposed to be actually submitting? Is it the importer of record? How does that work if you're a company and you're not the importer of record? Do you have to coordinate with your shipping partner? I mean, how does all this intercompany stuff also work? I'm just kind of curious, practically how folks have been sort of handling this.
Yeah. So CAPE is an acronym. It stands for the Consolidated Administration and Processing of Entries System. So they came up with an easier word, CAPE. And the importer of record or their broker are the only parties that can operate within CAPE. So technically you can assign, like, for instance, your attorney access to your CAPE or to your ACE portal. CAPE is used within ACE, and ACE stands for the Automated Commercial Environment, which is the system that CBP uses in order to process entries. So if you as an importer of record can create an ACE account, your broker has an ACE account. You can either one of those entities can operate in the system to use CAPE. In terms of who in a commercial setting, how this is being handled, there's a variety of ways. Some really customers have subsidized suppliers in order to facilitate the added cost of tariffs. Oftentimes, those have been dealt with using agreements. Sometimes they haven't been, and so there's nuance in how to address who's responsible for doing what in terms of mandating that the supplier go back and use CAPE or try to get a refund, or where the money would go if or when the supplier or the importer does that, operates within CAPE. So yes, there is a lot of commercial coordination. There's a lot of really, I would say, nuance in kind of managing the historical commercial relationship as it relates to CAPE or as it relates to refunds generally, that companies are needing to go through in order to manage where this money goes.
It sounds like a job on top of an existing job.
It is.
So if we move on to this slide, I see Renette pulled it up. Tariffs are not going away. So, this is, I guess my question is, with the ruling from the Supreme Court, my initial reaction was, okay, the Supreme Court struck down the IEEPA tariffs. Now that limits the presidential and executive authority to take action in this respect. Now tariffs are back with Congress, and we can go about our business assuming that they're not going to exist. But it doesn't seem that that's been the case. I'd love to learn a bit more about what's happened since and how people should be thinking about the precedent and the tariff regime going forward.
Yeah, here's where the complication ensues. There are different really bodies of law that allow for implementation of tariffs. IEEPA, the International Emergency Economic Powers Act, was one of them. There's also various sections of the Tariff Act which enable these tariff collection processes as well. One or two really you see on the screen is Section 232 and Section 301. Those allow for the government to implement tariffs to balance threats of intellectual property theft or issues of national security. They're different than the IEEPA process because in IEEPA, the president had sole authority to implement the tariffs. Here, while the president can make the determination initially of some sort of threat to national security or whatever the case might be, ultimately, it has to go through a true administrative process. The decision, for instance, in really the first Trump administration to implement the Section 301 tariffs on China has withstood scrutiny. It's now, I guess, for 9 years since their implementation, and just last month, the Supreme Court determined that everything was followed in terms of the rules of the administrative procedure, where essentially an investigation has to take place, review and comment, public comment, allowing the public to submit concerns, questions, thoughts on the various topics, and then an ultimate review and recommendation by either the Department of Commerce or the U.S. Trade Representative, USTR. Under Section 232 and 301, those administrative processes kind of suggest that it followed the intended procedure, and thus, because it followed the procedure and determinations were still made, the validity of the tariffs remain. These challenges have been, as I mentioned, upheld. The tariffs have withstood the challenges, and so under these provisions of law that allow for kind of a review and comment and not just an individual making a determination, tariffs still exist.
Mm-hmm. That's super helpful. I guess another name that I see thrown around a lot is Section 122. I'm curious about it's like you read my mind, Renette. The Section 122 surcharge. What is that, and how does that relate to the Section 232? And yeah, what are we looking at here?
Yeah, so it's a great question, and what we did, we put together this slide to first try to track all of the different stacking. Back when IEEPA was still a tariff, there were different rules, countries applied. This chart was much more complicated. It, had 14 different columns, and some things stacked and some things didn't. There were exceptions, under USMCA versus not, and it was a very complicated chart. It's now pretty uncomplicated. It shows really all of the different tariffs that exist, and then kind of the stacking relationship between each one and standard duties. At the bottom, you see the standard duties underneath the harmonized tariff schedule, which is like the normal agreed upon, congressionally approved tariff, or I'm sorry, duty processing scheme. And then there's some entry requirements under merchandise processing. And then if there's a particular anti-dumping or countervailing duty issue, with like governments or countries that undercut U.S. pricing, those get added on top, and then just the normal import harbor maintenance fee. Then we split off, and you see in the top right corner, Section 122. This Section 122 tariff is like Section 232, like Section 301, a different body of law that enables implementation of a tariff. It also is within the purview of the president to make a determination of its application, but it's not without bounds. Under Section 230, I'm sorry, under Section 122, the government can, or the president can decide to implement a tariff of up to 15% to basically help balance the accounting of the United States. There's more technical terms, but to balance the checkbook, essentially.
Mm-hmm.
And it's limited, though, in duration. Only 150 days can this tariff be in place. And so we're coming up on that deadline. And in order for it to continue, Congress would have to authorize its continuance. So it's kind of in our space, looked at as a gap filler. IEEPA went away. Section 122 immediately came into effect. And then expansion really of these 232 schemes and the 301 schemes that you're kind of seeing in the top left corner or top really row of the slide have started to be more fully developed and applied to different products, different countries, and the like.
Mm-hmm. No, that's extremely helpful. And where can folks find this information? Besides, I would encourage everyone obviously to screenshot every slide you love and then email Mitch afterwards and seek his counsel. But beyond that, where can people look to find these numbers? What's the current percentage for semiconductors? What's the current percentage for soft timber and lumber from what country? And then how do these things sort of stack? I mean, I'm sure that CBP put together some kind of rule book, right?
It's not as easy as you would hope to find it on the government website. A lot of different consultants, publications, etc., have put together their own version. We have our own version at Butzel.com. There's actually a link, I think, in the back of this presentation. We have a resource slide or resource page rather, where we continually update this information. You'll find this chart there. You'll be able to find the latest information under Section 232 and 301 and the countries that are being added to the list. You'll also be able to find updates like when Section 122 goes away, status updates on CAPE, all of that information. We spend a lot of time consolidating it because it's not easily found, in the official government website. It's there, right? There's links, there's ways to click 5, 6, 7 times to get to the right information. But what we've done is help consolidate it. So clients or really anyone can access our website and find it for themselves.
It's great. So that's super helpful. And I would encourage everyone to do just that. I guess I'm kind of curious. There was some additional, proclamations made. Now it's been a few months, but on April 2nd. And I'd like to understand a little bit about the new structure. I think there's something related to metals, it related to the 232 new sections of 232. And I appreciate if you could also walk us through that and what prompted that change. Was that related to the IEEPA ruling as well?
No, so it's important to keep, that's a great question. And it's important to keep each different type of tariff separate. Really, their only relationship are like those seen on the prior slide where they kind of stack on top of each other, normal duties as well as tariffs. But otherwise, from a legal perspective, none of these tariffs are intertwined. So Section 232, as you see, has a lot of different applications. The ones that are most prominent are the steel and aluminum, and then also the automotive and heavy duty vehicle tariffs. The April 2nd date that you're talking about created some more clarity or perhaps simplification, or perhaps, in my opinion, corrected the issue that existed with the older tariffs under Section 232 dealing with steel, aluminum, and copper. What happened on April 2nd was essentially the government tried to simplify the list of products that were covered under what percentage for tariffs as a steel, aluminum, or copper product. Before April 2nd, there was a procedure that allowed for really a kind of a credit or really a discount on the tariff based on the amount of steel or aluminum content in the product. So the rule was you have to pay this 25%, well, ultimately went up to 50% tariff. However, that 50% is only to be based on the value of steel or aluminum content. And what that meant was on the CBP website, again, 567 clicks in, there was an FAQ that described what that meant. And it said, the value of the steel content or the aluminum content is based on what you pay for the steel from the steel supplier. So imagine a product that's $100 product. In the auto industry, there's multiple processing steps that apply, and it might only be $5 worth of aluminum, right? You take aluminum and you extrude it and you bend it and you crimp it and you add fittings to it and you add rubber pieces to it. Now all of a sudden you have an air conditioning tube. Well, that started as a piece of raw aluminum. That raw aluminum by weight may only be worth $5, but the entire part, because of all the value add, is now worth $100. The old rules said that tariff will only be applied to 5% or to the $5 worth, so 5% of the value of the product based on the value of the aluminum. And then the reciprocal tariff at the time would be applied to the rest. There's a grouping of products under the different chapters of the HTS code, which are really primarily steel, aluminum, copper products. Think of fasteners, nuts and bolts, those kinds of things. And there was a discrepancy with how CBP was applying this exception to the derivative products. If it's a product that undergoes processing and it was on the derivative list, many of us, including many litigants now, have believed that that exception should apply because that's what the rule was. Parts of CBP disagreed and they were applying the full tariff to the full value. So that created a lot of lawsuits, a lot of conflict. On April 2nd, long-winded kind of wind up here. On April 2nd, they fixed that, so to speak. And now it's simply a tariff code by tariff code. I'm sorry, HTS code by HTS code determination of what the percentage is for each product. So this screen is blank because that list is long and what I just said is very complicated. But we do have a lot of information on our website. And certainly, as you said, Spencer, happy to answer anyone's questions, in a nuanced kind of product by product way of where it is on the list and what the tariff code is.
Got it. No, I think that was really, really thoughtful, Mitch. And it is interesting because I do remember people used to be trying to catalog and quantify from things like quote breakdowns, like the amount of dollar value of steel that was in the part for the purpose of the tariff. But now that's no longer the case. It's just if that product falls into a certain code, then there's a defined tariff and duty rate.
That's right.
Okay. Got it. Got it. But so and I guess the question is if let's say that you do have a part that is, not that much steel, it's let's just say it's like an injection molded plastic part with steel inserts or something. are those, the tariffs are designed to try to, I think at some level, affect the steel industry. So are the tariff rates, are you finding that they're kind of like roughly matching to the content of the steel per category or per HTS code? Or is it like if it has any steel, it's kind of at that like steel rate?
No, there's definitely directionality for
Okay.
sure in terms of application. Um, like fasteners, as an example, those are getting the entire, 50% tariff rate. But then
Yeah.
there's lower tariff rates that account for different types of products that are called less traditionally by volume, or by weight steel
Mm,
products. You're right. The purpose of, the stated purpose, anyways, of the tariffs on steel, aluminum, and copper was to balance out the steel industry in the United States compared to imports from around the world. And so I think that directionally, it's a fair representation of products that have more steel
mm.
versus less.
Okay. No, that's super helpful. I mean, maybe two slides from now, there's on the section 232 rules, maybe one before that. Yeah, like I love this kind of I love this practical advice on what to do this month. And so I would love if you could, run through this playbook. And I think we have a few more quick slides. It shouldn't be more than 5-10 minutes. And then I see folks are starting to put some questions in the chat, and I'd love to open it up to audience questions to pick your brain, Mitch, while they
Yeah.
have your esteemed expertise. But for the Section 232 rules, what should people be doing today? You get off this call, you go back to your desk, you go have a one-on-one with your boss. What are you trying to do?
Yeah, I first of all appreciate the kind words there, Spencer. My esteemed experience. That I mean, we have a great team at Butzel, and we're really pulling from a lot of different places to have all this information, and so credit to the team for sure. But in terms of what to do, yeah, this guidance really applies to any tariff that you have. It could even, I mean, it really does apply to your status under IEEPA as well. From especially the first bullet point, we have to know what we're working with. Your broker or you, if you have access to ACE, can pull a report of all of your entries and understand what tariffs were paid on what dates for what entries, and we can really start to do an analysis of what the opportunities are, either from a refund perspective or from just an audit perspective. One of the things we've learned throughout all this, people are looking more closely at their import data. They all have always had this responsibility to make sure it's accurate and complete. But to your point earlier, it's a full-time job within a job. Now there's people more dedicated just to certain aspects of trade, including tariff calculations. So using that data will allow us to, assist in categorizing what your opportunities are, what your risks are, to the next point of mapping out the overall exposure. Understanding which products are appropriately being applied, which tariff level, understanding even if it's the right HTS code, it's a human process of assigning the HTS code.
Mm.
Maybe soon, LightSource will come up with a great AI tool to do that, perfectly, but they're still human in the loop, to correct or maybe create issues. And so, that's not a perfect science. It's just it's governed by different criteria, different considerations, different use cases. And so it's very complicated. And sometimes there's opportunity to make corrections there to balance out your trade and tariff obligations. Certainly assigning a person responsible is key. This is a complicated issue. Having someone on your team designated and working either with your broker or your attorney or with other tool service providers is very important. Contractually, this is where the commercial litigator nerd in me, starts to come out. Is we have to understand who's responsible. Your question earlier was a great one. Who pays? Who collects? Who gets the refund if there is one? This is all driven by contract. If there is no contract, then the importer of record pays the money and gets the money back. So if you've given your importer of record money and there's no contract, there's going to be a dispute now about where the refund goes. So managing all of that commercially is important. And then
Mm.
ultimately taking what we've said here frankly, watching the news and understanding what could be coming down the line, and integrating that into your forecasting is a must, because really the crux of this presentation and in our discussion today is the tariffs aren't going away. They're just going to change. And so being able to use that as a tool is critical.
Mm-hmm. No, super exciting. And it is interesting to see how contract law, things like Incoterms are coming into play all of a sudden in such a big commercially relevant way. A lot of what we've talked about today has been, I would say, on the border of reactive. We're looking back at things that have happened historically. We're trying to claw back payments for IEEPA tariffs that have been revoked. I'm curious to learn a little bit about the forward-looking, risk mitigations that you would suggest that folks in the audience, really take to heart and execute within their organizations.
Yeah, we created this slide here. Yeah, defense versus offense. And, we've kind of hit on some of the topics. One of the topics on the defensive side, I think right now, we could maybe even move it into the offensive side, is this question of USMCA and, what it will be, where it will go, what will take its place, if anything. So utilizing that unknown as a part of your contract language is going to be important, right? I mean, if understanding your supply chain from a commercial perspective really will drive who bears the burden of paying amounts at the border. It will drive, if you're the supplier, providing product to a customer here in the United States, and your cost is a fixed price cost, or a fixed price agreement within your contract. There's risk that if the tariffs go up, you're stuck carrying that burden. So using that as a part of your negotiating leverage to say, we're happy to give you a great low price. However, you've got to address it if something unknown to us today goes into effect. We do that already with material costs. There's a very common practice of like materials indexing and saying if the cost of steel goes up based on this index, then our price goes up. To me, there's no reason we can't incorporate tariffs from that perspective. When we talk about, automotive industry, the OEMs are, have the biggest bank accounts. So like they're the ones that are able, in my view, to carry more risk. But they may not be willing to, and then that's just part of the negotiation. But then, as we go through anti-dumping and countervailing duty, understanding, that could be the next tool that the government uses. If tariffs aren't able to be utilized, then the rules for undercutting pricing might come into play, and then the government has good flexibility on doing an assessment and implementing a penalty essentially for those situations. And then, as we talked about, maintaining your compliance, having somebody that's forward thinking in your organization to understand not only the costs today, but what could happen if the winds of trade change, how that affects the sales of your company.
Mm-hmm. Fascinating. And that, who owns the compliance? Is that someone from the legal team internally at the clients? Is this the procurement organization, supply chain organization? Is it the CFO's office? Like who's responsible or who should be responsible for kind of taking ownership over, the tariff mitigation strategy, management, et cetera?
Yeah, no, it really is up to the entity to determine. I think you should always include legal, because interpreting these rules as they change is significant. It's a
Yep.
significant task, and there are non-lawyer professionals that do this very well. They understand the classification procedures. They understand compliance with USMCA. They understand how to, back when those rules of derivative steel and aluminum were in place, they understood how to cross apply the value of the steel and pull it from the invoice and track that down. And that's a very non-lawyer job. And then also kind of the sales and purchasing side need to have an understanding of how this all fits in. So, it's certainly, I think, a multiple team member approach, but an ultimate owner could be somebody from finance. So it could be somebody from sales, procurement. It really would be whatever fits the organizational structure, as long as, in our opinion, as long as there's team members, that are in a cross-functional way working together based on the various inputs that they would bring to the table. That's really what would drive success.
And on this slide, I'm looking at the questions from a few folks. So Faraz asks, what does FTZ stand for, and what does ADCVD stand for?
Yeah, FTZ stands for Foreign Trade Zone. It is an area. Basically, you can designate through application and an agreement with the government a part of even a facility, a part of land that for trade purposes is considered outside of the United States. In some respects, there's other kind of rules that go with it, but essentially you can do work in there, you can process in there, and the result of it could be an export from the US, without certain tariffs having to be applied and then, try to be drawn back, or, ultimately import in the US with certain tariff treatments that are derivative of that. AD/CVD is anti-dumping and countervailing duty. So that is that procedure where the government essentially can ensure that there's not undercutting of pricing and dumping that's occurring. Low-cost products coming into the United States. One of the most interesting recent, discussions about anti-dumping countervailing duty is tomatoes from Mexico. There's an agreement in place between the governments in Mexico and the United States that was subject to expiring, and that got worked out so that the cost of our tomatoes didn't skyrocket. But anyway, it applies to the products of all kinds.
That's super helpful. So I think at this moment, what I'd like to do is open it up to questions from the audience. I'm going to go in order of folks who submitted them. So, Bob asked the question, when you cannot determine, and this is from earlier when we were talking about the April 2nd clarification, when you cannot determine the percentage weight of aluminum, you pay tariffs based on the unit price, correct? Which can be an extreme overpayment. Is that specific to aluminum?
Yeah, so it's specific to all kinds of metal, essentially. So steel, aluminum, and copper now have the rule since April 2nd that you will pay a tariff based only on the HTS code. No longer will this derivative exception apply. So the old rule, Bob, just as you said, was based on the percentage of aluminum. It wasn't necessarily percentage weight, it was percentage value of aluminum. And now that rule has changed. And so based on HTS code, so your whatever your specific HTS code is for that product, it's on the list in a category of aluminum, in your example, aluminum tariffs. And so whatever list it's in is the rate that will apply. And yeah, I think there's reference to extreme overpayment. Certainly you're paying based on the grouping, not necessarily based on the amount of aluminum. So yeah, I mean, I think that's a fair characterization that you make.
Got it. Faraz asks a question. After applying for tariff refunds through CAPE, we are noticing that the CBP is implementing forced liquidation dates, which are well within the 314 days threshold for liquidation. Do you know why that is being done, and what's the official position on refund of interest on tariffs? Certain experts are of the opinion that interest are only refunded if the liquidation time and additional 80 days have elapsed since import date.
So the rule is supposed to be that until the date of tender, interest is being applied. So whether or not the product has liquidated, if you've paid, for instance, let's say you were one of the last importers under IEEPA, and that product is not yet liquidated. We are seeing the liquidation occur. Our understanding of why that's happening is to facilitate essentially the final calculation. That's all the liquidation stands for, is basically the preliminary final assessment of accounting for the amount of duties that were paid. And so, the finalization of the accounting is what's taking place with liquidation. And so our understanding of why that's happening is it is being subject to that finalization process. In terms of the interest owed, I haven't seen any discrepancies in expected interest, maybe a few days, but I haven't, a calculation based on a few days, but I haven't seen any significant discrepancies. Our clients that we've been working with, some of them received the refunds right away, and so it was a pretty straightforward assessment of interest. But the ones that have received it recently after 60, 70 days, haven't raised the issue with us of, how come we're missing 60 days worth of interest, which would be a significant number in some instances. So I certainly will look into it, but I haven't seen any of those issues. The basic rule is that until tender occurs, interest should be accumulating.
Extremely helpful. Brad asks a question about the future. What do you expect to happen after the July 24th expiration of Section 122? Is Congress expected to extend before midterms, after midterms, or a whole new tariff replacement altogether?
Well, let me get my crystal ball shot glass out here and take a guess. But no, it's an impromptu shot glass reference there. But no, I think it's a good question. And what we've seen is a ramp up in the number of investigations under Section 232 and Section 301. And our expectation is that those tariffs will work to, or those tariff schemes or rules will work to basically replace the Section 122 tariffs. Almost all of the tariffs that are subjected to Section 122 treatment, which are like major countries from around the world, are also the same ones that were subjected to IEEPA. They're also the ones that are subjected to many of these new investigations. So the likely outcome is that those investigations go forward, and unless or until some sort of specific trade deal is worked out with a given country, those Section 232, 301 type tariffs that are subjected to those administrative procedures, we expect to be the tariffs that go into effect.
Super helpful. Let me know where I can also get one of those crystal balls. I have some stock market questions.
Exactly.
Yeah, so I'm curious, this is a question that I'm just sort of thinking about, now that after the April 2nd, 232 declaration, where it's not based on the percentage of value of a given material in the end product, it's just wholesale, whatever, HTS code it falls into. I mean, are you finding people are, I guess maybe, I don't know how to say this, just like mitigating the tariffs or doing more like tariff engineering around that? Because I could see a world where maybe I'd have like a steering wheel that has aluminum in it, and then that has a PCBA for the airbag, and that gets imported at an HTS code. But then if I were to tell my sub-supplier, hey, break that out, send me the steering wheel and the PCBA separately, then I have two SKUs, each with their own respective HTS codes now. Could you use that to do that thought pattern to do tariff optimization? And maybe, I guess, theoretically, yes, and then yes or no, and then practically, are you seeing that?
Yeah, I would say yes to both. You certainly, tariff engineering isn't necessarily a dirty phrase, right? It's sometimes portrayed that way, like you're trying to circumvent tariffs, but it's really not. It's optimizing your product, your import strategy in order to, manage tariffs appropriately. We see it in a variety of ways of just reassessing your HTS codes, reassessing what it means for your import and commercial kind of supply chain to be applying the correct value. I mean, there's a whole complicated analysis of like, what is the value of this thing that I'm importing? And it's not necessarily what we always think. I mean, the base rule is the transaction value, the price paid or payable for the product that was brought in. But determining what that is can be complicated. If you bring a product in on consignment, there's a different analysis. If you bring a product into inventory, for a later sale, there's a different analysis. If you bring the product in just in time You may be what's coined a middleman. You're buying from one entity and in outside the United States and then selling to a U.S. entity as the middleman. There's exceptions for the first sale. What was the value at the first sale, not the value when you sold it here in the U.S. So engineering all that's complicated, but then the technical engineering aspect is definitely something we're seeing. Our companies resourcing, relocating sources? Are they doing interesting, assembly operations in the United States that they don't typically do? They're bringing in, like you said in your example, parts of products and then doing the final assembly in the United States. That could run into other complications with USMCA and or the future of USMCA and what is North American content or US content. So it gets very complicated very fast, but yes, certainly entities are doing that in order to try to mitigate the impact of the cost of tariffs.
Mm-hmm. That's super helpful. And I agree that I'll use the term tariff optimization over tariff engineering in the future. I guess I'm sort of curious, a little bit about what are the quickest wins? Because there's a lot of different avenues people might choose to use for tariff engineering. I'm curious what you're finding to be like if you had to say, hey, if I wake up and I have not done anything yet, and I just want to go and get value today. I mean, number one would probably be going back and getting the IEEPA refunds, but that's only a one-time thing because going forward, it'll be section 232 and 122. What would you say are like the 2 or 3 practical wins you could be like, hey, if I want to go get a few $1,000,000, quickly this year or next year, what would you recommend folks do?
I think certainly take a look at that valuation question I mentioned. For so long, especially for like under North American importation under USMCA, entities were simply just using their final PO price, as the value, and that's of course going to be the highest number. But if all of a sudden you're able to use the cost of the product that you have before you sell it to your customer, that could be significant. If you're able to use, portions of the total final price, the portions that are applied outside of the U.S. as opposed, and basically marking down U.S. overhead, U.S. logistics, all these other things, that could be a cost savings. And it's a complicated analysis, like I said. So a lot of companies, have benefited from doing that. It's painstaking, it's difficult, but it has paid off. In terms of the practical logistics, I think ensuring that if you are the importer of record, from your commercial papers, are you actually the entity that is supposed to be paying the tariffs? And if so, okay, but if not, then are you doing it and you don't have to, or are you able to get reimbursement, from your supplier or from your customer? And then I think lastly, certainly taking a longer view look, need to start today if there's a plan to optimize the supply chain itself. There are consignment opportunities, there are FTZ opportunities, there are different ways of adding value in the United States, which would then take away the value that's outside, which would then reduce the overall tariff burden. And of course, that's a cost benefit analysis because sometimes it is more expensive, or oftentimes it is more expensive here to do certain processing steps than it is outside the US. But is it significant enough to offset 50% tariffs? Perhaps, so that could be part of the equation as well.
Great. I'm noticing 2 more questions from the audience. FedEx is making the IEEPA claims regardless if they are importer of record or not. Is this ethical since they're receiving all the refunds back despite the consignee paying the tariffs?
There is definitely going to be disputes between the entities that have done things on behalf of others and, paid or not paid the tariffs on behalf of others. You as the consumer, or you as the user of their service, certainly had to pay them, to have the duties returned or to have the duties applied so the products could enter. Um, I think it's very ripe for dispute on what happens if they get $5 billion in tariffs or whatever it is that they, outlaid, even though it was your money. In a commercial setting, typically, those are captured by terms and conditions. I have not analyzed the postal type entity or transport type entity terms, but they likely will have at least a section that addresses this. The question is it favorable or not? So, yeah, I think if there's a fight you want to pick with them, give us a call.
Okay, sounds good. That is an invite for a class action opportunity. We each get $3.50 back from FedEx.
Perhaps.
Sounds good. And so Ayush asked a question, if the 80-day liquidation date has passed, is there the option of the Form 19 protests? How would we know if brokers are doing the 19 protests or CAPE declarations?
Yeah, so the broker's not so the short answer to your question is yes, there is the ability to do a protest. The protest window is actually 180 days post liquidation. So first 80 days, you're able to apply through CAPE automatically, just by submitting your entry numbers. As long as it meets the criteria for phase 1 or phase 2, it should be no problem. If it's after 90 days or after 80 days, then it's being counted as finally liquidated, which CBP is saying they can't do anything about it. Two options exist. One option is filing a protest within the next 100 days before the 180-day mark. The other option, which I think in our view is likely to be the quicker option, is to file a lawsuit with the Court of International Trade. And normally lawsuits aren't fast, but in this case, we're understanding from CBP that on the 29th, they plan to roll out phase 3. I haven't seen an update as of late of whether they're going to hit that date or not. They've hit the other dates, but phase 3 is supposedly going to be an opportunity for any entity that has filed a lawsuit to utilize that lawsuit as kind of their ticket to entry into CAPE phase 3. Essentially, the government is taking the position that it's outside their control, anything after 80 days. Therefore, it needs to be subject to a court proceeding. That court proceeding, they're willing, so far, we understand, to say, if you give us the case number and your entry numbers and show that they're aligned, then we'll proceed with the refund, supposedly. So that would be much faster than a protest, even though protests are still possible. And yes, we're doing them for clients.
Okay, that sounds great. And so it's 80 days from the date of the overturning of the IEEPA tariffs. When does that shot clock start and end?
No, 80 days from the liquidation date. So you bring a product in, let's say somebody brought a product in on February 1st of this year before the tariffs were struck down. 300 days after that is when the products are supposed to liquidate. Once they liquidate, then you have 80 days to before 80 days after liquidation. So from day 1 to 80 days before or after liquidation, you can use CAPE. From liquidation to day 180, you can file a protest. And from liquidation to day, really, 2 years after the implementation of the tariffs, you can file a lawsuit. So there's kind of 3 blocks of time.
Got it. Okay. Super concrete. Really appreciate it, Mitch. I know we're at time, so I just want to point folks to 2 quick resources pages. This is where I would certainly myself recommend everybody on my team go if they wanted to learn more about tariffs or trade policy. Visit butzel.com/resources-trade for tariff roundups, webinars, client alerts. And then for anything related to procurement AI, I would recommend you check out our website, LightSource. You can request a demo. We've got great content on our blog. I have a podcast and I didn't buy this microphone for nothing. So please like and subscribe and check us out at lightsource.ai. Mitch, thank you so much. And thank you to everybody who signed on today.
Thanks, Spencer. Great to be here.